on Australia's business channel. This is Media Week.
Hello, welcome to the program. Ahead, more please. 10 Network raising capital as ad markets remain weak. League battle. We'll look at the fight for the NRL TV rights after David Gallop's resignation. And the Craig Thompson scandal. Could reporting of it lead to tougher media regulations? But first, to the big newspaper publishers, News Limited and Fairfax, preparing to reveal major restructures as they deal with falling print edition sales and rising consumption of online sites. But News Limited CEO Kim Williams says that reports of mass redundancies are misinformed and speculative, while at Fairfax, where staff went on strike last week over job losses and offshoring of some production, CEO Greg Hywood has sent a video wake-up call to staff. Well, for more on all of this, we have with us our co-host James Manning, the editor and publisher of Media Week. James, great to see you. Just firstly, what did Kim Williams have to say in this email he sent to staff? Yeah,
pretty much what you said. Look, misinformed. The speculation was about, big numbers are anywhere from 600 through to 1,200 people have been mentioned, not all of them sort of content people, editorial, but, a significant number of them. We talked about it, I think, last week. Some people thought we'd get some more detail on Monday of this week. That didn't happen. Now we're hearing, look, sometime in June there'll be a sort of a release which will be detailing, the staff will hear first, of course, what the plans are. But as we said, just streamline the company, make it a bit more nimble, I guess, and probably a bit more profitable. So a couple of weeks, perhaps, we'll get some more detail. Yeah, I think it'll definitely be in June. But yeah, apart from that, we really don't know. As Kim said, we'd be just sort of, guessing. And of course, Fairfax CEO as well, Greg Hywood, sent a video message to staff, which went public. Here's a little of what he had to say.
But we have to stop any dysfunctional internal competition. And we can no longer afford to work in silos with little or no collaboration. This requires us to move from an inwardly focused culture to an organisation that looks externally. This means that we need to put our audiences first and our customers first.
So, James, Greg Hywood speaking there, I don't think that was actually meant to go public, was it, that video?
He did have a troubled look on his face too, but I think he would have expected that it probably would leak out. And he's obviously saying a message that they think, it's a good thing for the company going forward. It's something they should also perhaps be telling the board, because he talks about dysfunctional, perhaps a part of the staff, but you look at the Fairfax board, and we've talked about this over the years, that, there does seem to be sort of internal bickering, and it's not as if they all, marching to the same beat. But yeah, there will be change there. They've got new structures. They're looking at I think 7-day rosters too, perhaps, and things that will definitely be unveiled. I think they've got a start date of July 1 for some new things they'll be rolling out.
Something that we've been chatting about is whether the publishers are going to be just stopping altogether some of those midweek print editions of newspapers, and certainly that's something that we've seen, that move to a 7-day publishing model already in the UK at the Daily...
The Mirror Group, I think, yeah.
Now, Warren Buffett has been speaking about this.
Yeah, there's been some newspapers in the US have stopping some of their midweek editions, maybe doing 3 days a week, a Sunday or a Saturday, and then 2 weekdays. But yeah, Warren Buffett's, look, something we've talked about in the past, but I'm off that bandwagon now, because Warren Buffett said, look, it's a bit crazy. You're trying to sell a newspaper, but then only coming out on every other day. It sends a weird message to people who you expect to buy your print edition. They'll eventually maybe all go digital, and you'll lose a lot of your revenues. And like Fairfax revenues, I think something like still 3/4 of their ad revenues are still locked to their print editions.
All right, let's get the view of what all of this means for advertisers, media agency, and for the jobs market too at the top level in media. We are joined this week by Barry O'Brien, advertising and media consultant, and Chris Davey, director of Talent Capital, a boutique executive search, training and strategy consultancy. Great to have you both here. Thanks so much for joining us.
Thanks, Brody.
Barry, if we could start with you. I mean, it seems to really be crunch time now for publishers. Do you think that they're starting to make decisions that really should have been made a few years ago?
I think that's the issue, Bridie. This is a tough time. This is a tough market. And it's not just happening in this market, it's happening worldwide with newspapers. You know, over the past few years, we've seen major titles close around the world. So our major organisations, be Fairfax and also News, are under that pump. They're under the crunch, and as such, they have to get down to what works, what do we need, and what are customers buying? What are they out there buying? And as such, you know, the Fairfax price is what, 62 cents now, and that's sort of, you know, down from $5 over the last few years. So that sort of says it all in terms of where you're up to as an organisation.
Chris, you work in the recruitment sector. What are you seeing out there in the marketplace? We're seeing, you know, big reviews of the structures for both News and Fairfax. How's that sort of filtering down to what you do?
Well, these companies are essentially re-engineering themselves completely from the ground up, and what that translates to is the required skills and competencies they need in their executive teams needs to be re-engineered as well. And that can't happen overnight. That has to happen over a gradual process. So, you know, you're seeing executive people that need to be talented across more than one platform in a lot of cases. So, people that are purely experienced in print need to upskill and become skilled at digital and new media. And people in digital and new media also need to be upskilled and look at traditional media knowledge as well, because of the, I guess, some rationalisation and the de-siloing within these major businesses as they equip for the future. And a lot of this is consumer-led, because consumers are engaging with these media brands and media platforms very differently. So advertisers also need to engage differently as well. So the big companies need to have senior people to commercialise their offering to respond to the advertisers' needs.
So you don't see, I guess, all, you know, new opportunities being solely in digital. There really need to be no more specialisations.
Well, you know, there's really, I think, opportunities across the broader market with media owners and media agencies. Most of the opportunities created, however, from growth are across digital and across new media. But traditional media companies are replacing people if they leave, but often if they replace senior people, they're looking for a different set of skills compared to the previous person. People that are equipped to generate new revenue streams and commercialise the media inventory in different ways that advertisers are calling for.
Barry, I mentioned newspaper. You know, the revenues are still very dependent on what they're putting out in print. Obviously, big pressure on them to get rid of a lot of costs. I guess a lot of the salespeople are going to be safer than the content people, but it's a tightrope you've got to walk. You can't sort of, if you devalue your content, that will impact significantly on those ads.
The one thing about the reader is they buy newspapers and they switch into the digital product because of the content. They're not buying it because of the ads. So if you get that balance incorrect, then all of a sudden it will impact greatly in terms of the end product and also the end result with the money that you write. So, you know, it's still a great product, but it's sort of like it's that fine balancing act. And I'm not too sure where else they can cut, because they've cut and cut and cut. So there's not a lot of, you know, nowhere else that they can go. They want to now put offshore the you know, the printing over to New Zealand, etc., and that's a major impact in terms of organisations and cities like organisations like Fairfax up in cities like Newcastle and Wollongong. Those, you know, that's a big job loss up in those markets. So the knock-on effect of that is enormous.
In your agency days, were you mindful of the different audiences you're getting for print and for digital? I mean, is that a more pure audience, the one you're after, whereas your digital is a different offering and it's a free offering, especially for Fairfax still? Yeah,
you know, the focus, well, as Chris has just mentioned, there's more and more focus in terms of the digital product, and that's where, you know, our agencies were being focused. But it's also, he's hit the nail on the head in terms of you've got to multitask. You just can't be the digital bloke, and you just can't be the sort of, you know, the offline person. You've now got to be able to sort of bring those skills together, and we're going to see more and more of that. And I think these organisations are probably having a bit of a pushback, but it's the reason that Kim Williams went to News, was to bring them sort of more up to speed in terms of the digital space and push that side of it.
Chris, just quickly, I mean, are you expecting to see, lots of people now out on the job ranks then as a result of what's coming? And how do the businesses and publishers actually retain the good talent? What are they looking for?
I wouldn't say there's going to be a huge volume of people on the market looking for roles, no, but you'll find that there'll be a slow, gradual period of transition as traditional media specialists need to either upskill or be replaced by people that can multitask. How media companies retain good talent that they identify, it's about creating the right environment, and it's a lot more than just salary. It's about development opportunities and about resources and resourcing the business with the right tools where people can commercialise new products, invest in new products. They're going to drive new revenues. So yeah, creating the environment where people can really achieve their goals, and that's not just in salary.
Do recruiters ever get involved? Does a media company ever ask, look, we've got this executive team, could you give us an opinion on, who the best people to retain would be? Yeah,
look, I think it's about talent identification, understanding the business's strategy and where the current market conditions and the business strategy, and then being able to identify what sort of talent is required to achieve those goals, and then really analysing the individuals involved and seeing whether they've got those talent competencies in their executive team, and making sure you've got a good balance of talent around the table. Not talent that's too niche,
Just stay with us, because we're just going to switch sectors and focus on another big story this week. The 10 Network, surprising the market, launching a capital raising to buy programming and strengthen its balance sheet as ad markets remain weak. Here's the details with IG Markets' Stan Shamu.
Well, it has been a busy week in the media space, but undoubtedly 10 Networks has been the biggest story of the week. We heard 10 come out and announce a $200 million capital raising, which they will do through a 348 entitlement offer with an execution price of 51 cents, which is effectively a discount of about 20% to its last trading price of about 64 cents. Now, there are some positives to this. Its major shareholders, who account for about 43% of the share register, have already come out and said they will participate. So that is quite encouraging for the stock. At the same time, this will help them strengthen their balance sheet. And obviously they have come out with a trading update as well, just highlighting that they're experiencing a deterioration in advertising revenue, with numbers up to May this year, for the 3 months up to May, falling around 14%, which is quite disappointing, but not too surprising considering the challenges the sector has been facing over the past few years. And it really does seem like the trend will continue. We've already heard most analysts come out, give 10 sell ratings, which is something that's become quite a trend in the sector. It does seem like, though, Seven West Media is still the preferred stock in the sector, although this trading update has filtered through to Seven West Media as well, with some analysts coming out and revising their earnings on Seven West Media. It does seem like that stock will continue to get preference, with an overweight rating from JP Morgan. Now, effectively, this capital raising will help 10 Networks reduce its net debt, but unfortunately it will be dilutive for FY13 earnings by about 14%. So that is a negative for the stock. However, though, looking into the long term or the medium term, it doesn't seem like there's an end in sight to the current deterioration in earnings, and that limited visibility to where earnings are going is really hurting the stock and the sector as well.